Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He's speaking to us from the beautiful Bahamas. Welcome back to the show, David.
Not so beautiful today. Today, actually, we kind of have Vancouver-type weather. It is that time of year here. It's a rainy season, and it's kind of raining, so, which is okay, because when we get these dry summers, you know, that's what keeps the oceans hot, and that's usually when you get a bad hurricane. So I'm all for little rainstorms every single day during the summer.
Well, Vancouver has been really nice and warm and sunny the last few days, but it's been cool and wet here, too, which means no forest fires. So that's good for us as well over the summer.
Yeah, like I said, a real rainy, cool summer does not bother me here at all, you know?
Because cool there is still 80 degrees.
Yeah, and actually, because other than that, it's going to be like 90 every day with super humidity, and, you know, that's actually not, like, it's okay for a few days, and the water's beautiful, but it's just, you know, it starts wearing on you, especially now with COVID, and you really can't travel anywhere. You're like, okay, there's worse places to be than stuck in the Bahamas. But on the other hand, it's like, you know, it gets a little oppressive by, like, say, September, October. You're dying just to not go outside for 10 minutes and sweat up a bucket.
David, gold and silver, are they really starting to break out now?
Yeah, I really think so. I think the last, a few days before, we're doing this interview was, I think, real clincher. I think the one thing I was waiting for was, historically, we've talked about this in the past interviews, that gold to silver indicator is way out of whack. It was, in terms of the ratio, like usually, silver historically will trade, 50, or gold will trade 50 to 60 times the price of silver, and, maybe at a low and a spike, it will get down to 10 or 20, and then during the bottoms, it'll get down up to 80 or 90. Well, it got up to over 100 to 1 at market bottom and precious metals bottom in March. And still, even with silver coming off the lows, it was still trading at, on 90 to 1, which historically would still be one of the most extreme ratios, around. So now what we're seeing is, silver's about 22 as we're speaking, and gold's pushing against 1900. So now we're seeing the ratio get down to 81, which still means silver's quite cheap, but I think we're coming more into line with the historical normal now, and that silver breakout is really kind of confirming the precious metals bull market. And here's something else to take into hand, and I was looking at some charts the other night, and because one thing is, we always are looking at the euro and the US dollar. Those are the two kind of major currencies in the world. Well, the thing is, if you go and of course, because US dollar is reserve currency, we're still looking at gold, pressing up against its all-time high in 2011, and of course, adjusted for inflation, it's still quite a bit below its inflation-adjusted high. But if you go look at, like, especially emerging market currencies, like the rupee in India or the ruble in Russia, or even like currencies which has fallen quite a bit, like the New Zealand or Aussie dollars, gold is easily above its, Canadian dollar too, easily above its all-time high in 2011 in many of these currencies. And then again, if you look at oil kind of being low and lack of kind of wage pressures due to, weak economies because of COVID, if you're mining in Australia or South Africa or Russia or, any of these countries, you're going to be making, because your expenses are in the local currency, and you're, converting gold into the local currency at almost all-time highs. Your margins are going to be fantastic. And I remember in the early 2000s, right at the start of the gold bull market, a lot of the South African rand basically collapsed against the U.S. dollar, And just that little moving goal from about 250 to about 400 or 500, combined with the collapse in the rand, caused those South African miners to have absolutely gigantic profits, because again, their wage expenses and all their expenses were in rand, but they're selling gold in dollars, and then when they convert that back to rand, they were getting huge amounts of money. So I just think that for a lot of people are underestimating how good the margins can be in some of these miners, especially in some of these emerging markets whose currencies over the last 5 years really fell a lot against the U.S. dollar. Now, that might be a bit of a sweet spot, but if gold continues to move higher, even if their currencies start to rally against the U.S. dollar, they still should do quite well. And just a quick note to turn to the U.S. dollar, it really looks like it's close to rolling over here. The dollar is at a multi-month low. The U.S. dollar index is down to about 95. 94 is really the key support level. The euro had a lot of resistance between 114 and 115, and it broke up through that. So the euro is looking like it can move higher. And I think, and people aren't talking about this aspect of COVID. Even though it was weaker heading into it, it looks like the European economy is actually going to be much stronger than the U.S. economy coming out of this. Like their stimulus is much smaller. Their debts are much smaller because they already had kind of high structural unemployment. They're not going, something like Italy might go from 11% to 16%, where the U.S. went from 4% to 15%, right? So it's kind of like in a way that structural unemployment almost helped them because it wasn't as big as a shock to the system when it turned around. And for the most part, governments aside, the individual in Europe, the average German, the average Italian, does not have as much debt as the average American or Canadian, and that also relatively might be helping them kind of go forward. And then if you take in the political aspect in terms of the currencies, and then I'm going to talk the economic aspect. So the political aspect is like this. If we were talking about the U.S., they're running up these huge deficits, but if you go look at the politics side, the U.S. is having all these riots and protests, and Europe had a few of those right when protests started, but really not nearly as many. So again, you're seeing something structurally much weaker in the U.S. as kind of like a society, and I think that also has to affect the flows into the U.S. dollar as well.
We'll have more with David Skarica right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking to David Skarica. David, a listener asked, what are Robinhooders?
Robinhooders. So Robinhood is like this app where you can trade stocks, and it's really for kind of beginners in the market. Like, first of all, they have a more limited number of stocks. I don't think there's a lot of OTC or these small miners on there or the whatnot. But, it's really for some people kind of like with smaller amounts of money, smaller accounts, and you're almost always trading off your smartphone or cell phone, as opposed to when you have a regular brokerage account. Like I still use brokers because I do a lot of private placements and that sort of thing. So my brokers they have an infrastructure, and they'll get their account people to fill out the forms for me. So I still don't mind using full scale brokers because of the way I invest. But with Robinhood, it's almost like even if you're using TD Waterhouse or some of these other things, mostly you're usually using it off your computer. Robinhood is you're almost always using it off, your app. And then what they do in Robinhood is they track the stocks that the number of users use, so they show you that, and then people kind of tend to chase the same stocks, and because Robinhooders tend to be millennials, because again, you are doing this on your phone, they tend to chase, all those kind of tech stocks and Apple, Amazon, etc. And what's interesting is their kind of leader has become David Portnoy, who's the CEO of Barstool Sports, and Portnoy is a self-proclaimed gambling addict, sports gambling addict, because where there was no sports, and he lived, he was located in Manhattan, because, that's where Barstool is. He basically, when he was in quarantine, just started day trading stocks to kind of make up for the fact that couldn't gamble in anything else. And I have a bit of a relationship, not with him, but like a guy from Barstool Sports actually came to my house in the Bahamas right before the lockdown here, and we did a bunch of videos all around the island. So I have a bit of an affiliation with Barstool. But then, Dave's like a real character, and he even has this saying right now, the stocks only go up, because they have been since the bottom in March. And because he's kind of chasing momentum, he's kind of using very basic terminology and ways to basically analyze stocks. He's kind of become their leader, but I think where this has been seen is something like the top 6 tech stocks in the Nasdaq 100 now make up the 49% of the index, which is higher than even the big tech stocks did, in 2000 when you had the tech bubble, when back then Microsoft and AOL and companies like that, Cisco, Lucent were leading the way. So I think that's a sign that, these Robinhooders, when they, Tesla would be a classic example of stock that they would chase. They really get into these companies and kind of chase them higher. And probably a lot of professionals who maybe have been short something like Tesla or something like Nikola, because fundamentally their valuations are out of whack. I think the Robinhooders have almost put it to them and caused them to, have to cover a lot of those shorts. Now, I think in the end, the Robinhooders might end up in serious trouble because they've just really been trading since March, and they just think, like Portnoy says, stocks only go up, and when there is a leg down, they're not going to know what to do. But I do think the positive side for us here in the gold and precious metals market is, I think, if the market has another leg lower, more stimulus is coming, more money printing is coming, more devaluations are coming, and that's going to be good for the gold and gold stocks. And the Robinhooders are the exact kind of people that will start chasing those gold and gold stocks once they're kind of the only game in town.
We'll have more with David Skarica right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. Gold and silver, of course, are bright and shiny and get a lot of attention once they start to move. What about the less sexy things like copper?
Just quick, I just like to finish off on the Robinhood theme. There was
Sure.
one thing that's kind of funny about them as well, is there was a study showing that baby boomers are really, starting to get out of the market because now, the economy's weaker. They're worried about retirement. So, they're using this rally as a way to get out, and the Robinhooders are buying stocks. So it's almost like the baby boomers are selling the stocks to their kids. It's pretty amazing, right? So we'll get into base metals. What's kind of interesting is a lot of people, what I find is what individuals do is they look at the last bear market or downturn, and then they think the exact same thing was going to happen. Like, for example, one reason I made a mistake in 2008 is I thought gold and gold stocks would continue to go higher in the bear market, because that's what they did in 01, 02, and then they got whacked with the rest of the market, right? So what's happening now is a lot of people thought we were going to have this big deflationary collapse, and everything would go down, including base metals. But we've seen the opposite. Now we're seeing copper, iron ore, all these things go up. Now, the U.S. has already done $2 or $3 trillion in stimulus, and they're going to do a lot more. And it doesn't matter who wins, Trump or or Biden, they're going to do a lot more next year. Biden's already talked about another $2 trillion kind of like infrastructure type program. And I'm sure Trump is probably going to offer the same type of thing. So that again will bring demand for base metals. And I think what you're seeing is a stagflationary kind of trade setting up here where the dollar is rolling over, as I mentioned. The base metals are starting to move higher and the economy is still kind of weak. And if you get a lot of this government associated stimulus, like the European Union just announced an $850 billion stimulus, that's infrastructure stimulus, right? That's roads, probably, trains, bridges, that sort of thing, right? And that brings demand for base metals. So I think what those base metals are signaling, and you know what, they're all pretty overbought in the short term. So maybe if there is some kind of market decline, they will take back some of these gains. But I think the fact that they've been so strong off these lows and now almost back to the highs they were earlier in the year, pre-COVID, I think that's really signaling that they're going to be, in that we're going to be in some kind of deflationary kind of, inflationary, stagflationary kind of environment here, So I think, they could be good investments as well. And everyone is ignoring them, right? Most people are just looking at the precious metals to what's going on fiscally around the world. But I don't think you can ignore the base metals. And they, in a lot of ways, were cheaper in even deeper bear markets and had probably more negative sentiment against them than the precious metals. Because even at the lows in March, people thought, oh, you know what, gold and silver go back up because they're printing money and it's a fear trade. No one was really bullish on copper, or no one was really bullish on iron ore. So in a way, those things might have just as much upside.
Are they going to keep cranking out stimulus program after stimulus program?
Yeah, I think in the States they just are. I think you have this kind of arrogance there where they're the reserve currency of the world and they think they can do it because, they're about to do another one now, and the Republicans want to do about $1 trillion. That's funny that we say only $1 trillion now. And the Democrats want to do another $3.5 trillion. So I think they're just going to keep doing it until they can't do it any longer. And, you're talking about the debt being $26 trillion now. I just think at some point, if interest rates do start to tick up, the debt is so large that eats into a huge point, part of the budget, and then you really can't do it any further. Or even if they try to suppress rates, probably the dollar tanks so bad, you get some serious inflation, and then even these politicians realize they can't be doing stimulus all the time because all they're doing is destroying the average person's, standard of living. So, I really think that they are going to try to keep doing it. And I think their plan is just, they think that, because, this isn't just like the Great Depression, which was, say a financial crisis, or like 2008, which was a financial crisis as well. A lot of these politicians kind of are under this delusion that, COVID just, wrecked the economy for a little while. And then as long as they can keep stimulating, at some point when it passes, and usually these, pandemics last a year or two, that everything will go back to normal. I don't think that's the case. I think this is changing people's spending habits, and the whatnot. So another thing to get back to the kind of inflationary, and they're going to keep doing stimulus forever, stagflation environment, which I think is really interesting, is let's go look at, quickly here, what's going on in the corporate bond market. The Fed is buying corporate bonds, but bigger, they're actually lending to companies. So this is why we're kind of getting stagflation, because the deflation argument was, all these companies are going to default, and then, that brings down the prices of everything. But what I think they're doing is they're creating like a zombie economy. And what they're doing is, so let's say you're company ABC and you have a whole bunch of debt. And that debt comes due, rather than shareholders or bondholders or the banks or whoever you own the debt to, say, hey, you can't pay this back, man. You just got to default on it. And then, whatever, the company will go into bankruptcy and be restructured and the whatnot. But what's going to happen now is they'll be able to borrow the same amount from the Fed, go back and pay off that debt or roll it over through the Fed, and then, pay off this ultra low interest rate that they're getting because the Fed is supporting the corporate bond market. So it's kind of similar to what Japan did, even though Japan had more of a deflationary bust. And I think the plan in the U.S. is, let's allow these zombie companies to survive so we don't get a wave of defaults, and then let's inflate the hell out of it so these companies can easily pay off that debt, right? So but the problem is that will take a while to play out. And if you got companies like GE and there's a million others like that just have a huge amount of debt, they won't really be doing any R&D or anything productive. They'll just become these kind of zombie companies that are much smaller than they are today, kind of floating around, barely staying alive. And that kind of happened in the Japanese banking sector in the 90s and 2000s. And I think that might happen in a lot of the economy here in the next, 10 years or so.
David, thank you so much for chatting with us.
Thanks for having me.
My guest has been David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. If you have any questions for David or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.